All right. Hello, everybody. We are here for the C3AI earnings call. I will be live streaming it here. We're going to listen into the results. C3AI right now is down 14% after hours. And yeah, as a result of that, we are going to see kind of what's going on and, essentially what's happening. Palantir has not been affected yet from this. Let me share my screen right now just so you guys can see what we have. So AI, again, ticker symbol AI, is down 13% after hours on apparently bad guidance, year-end bad guidance. So it's down to 34.50, down 13.75%. Palantir is down 2%. So Palantir held up very strong today at $14. C3AI has not been able to hold up as strong. Kelly, yes, I am well. I am well. I hope you're doing well, but take this as a sign as yes, I'm well. TJ, what's up? Adam, what's up? Ray, thanks for being here. Tess, Cap, what's up? Ahad, Michael James. So Palantir's doing okay. They guided down week 11 to 20% growth guidance. Yeah, seems like it wasn't the best. And it didn't affect Palantir yet, which I'm surprised by the fact that Palantir is holding up so well. But it does seem like it was bad for C3. Let me pull up the live call. I'm actually really curious to listen to these guys because I've never heard these guys before ever speak about their business. So this will be a first for me, kind of getting a deeper look into who they are. Where's the link? I just had it. Did it disappear? One, two. Oh, no, here it is. There it is. Okay. So let's take a look and listen to what they're going to say. I don't see their numbers. Are they out? No, I don't think they didn't put the numbers out. It's just still music, right? You guys hear music? Yeah, it's just still music right now. It'll probably be live in a second. So I don't see a deck. I don't see a presentation. I don't see anything, to be honest. I've seen the deck for the previous quarter, so I know they have to have a deck, but I don't see the deck for this quarter. It doesn't seem like the numbers. Oh, there it is. There it is. Q4 press release. Okay, we got it. May 31st, 2023. So I can't share both. Man, StreamYard has to allow being able to share audio without having to share the specific screen. Let's play this again. Let's see if they started, and then I'll pull up the numbers as well. Where is this thing? Okay, here it is. I have way too many tabs open. Here it is. Okay. So I will pull up the numbers right now. Okay, I'm looking at the numbers. Some highlights. Positive free cash flow, $16 million. Okay, they're starting. We'll go through it in a second. Are they? No, they're not starting yet. Okay, so I'll keep talking. 74% attractive margin, 43 agreements, year-over-year growth 59%. So I guess that means deals. They're calling it agreements. Non-GAAP operating margin, they're losing 25.5%. They were losing 32% in full year 2022. Bookings driven by C3AI applications, 83%. Yeah, this is so weird how they present this stuff. There's like no charts. There's just like numbers that don't make much sense. They brought in 72 million in revenue. Free cash flow 16 million. Their net, they lost 13 cents a share. I think that's what also got the market upset because they expected like 11 cents per share. The fact that Palantir is holding well, I'm looking at Palantir right now. The fact that they're holding, Palantir's at 14.36. The fact that we held 14 all day, unbelievable to me. Like incredible. I'm so proud of Palantir. I'm like so proud of it that it held up because I did not think it was going to hold up today. I would have held it. It was a red day this morning. It went down to 13.89, then just spiked back up. And so that's what. So I'm looking at you guys. Well, let me share this tab. Yeah, let me share this tab. I can hear the audio in the back. So once the audio is done, or once they start, I'll just move back. So this is their highlights. 43 agreements, 74% attractive margin, qualified pipeline growth. Are they starting? No, not yet. 16 million positive free cash flow. Yeah, still music. Non-GAAP operating margin, 25.5%, 77% attractive margin. Number of agreements. I don't know what agreements means. I don't know if that means deals or contracts or customers, but it is up 52% year over year. There's their guidance. I don't see the guidance. Oh, here it is. Here it is. So full year 2021, 2024, they're going to bring in about 295 million to 320 million. That is 7 to 11% year-over-year growth. Or, bro, I hate when these people say full year 2020. We're not in fucking 2024. I don't like Snowflake does this shit too, and maybe I'm too ignorant to understand this, but like it's Q1 of 2023. Why are we talking about? I just, it's so annoying, bro. Like Palantir said, we're gonna do 2 billion in 2023. I'm like, okay, I get it. And these motherfuckers are like, well, we're talking about 2024. We're not in 2024. We're in 2023. Last time I checked, we're in 2023. 2020. I sound like a baby. We're in 2023. Could they be sandbagging Michael Brathwaite? I don't know. I mean, sandbagging assumes there is some big growth story here, and I don't know if there is. Okay, we're starting.
Earnings call for the fourth quarter fiscal year 2023, which ended on April 30th, 2023. My name is Amit Berry, and I lead investor relations at C3AI.
Bro, the dude's name
With
is
me on the
Amit.
call today is Tom Siebel, Chairman and Chief Executive Officer, and Juho Parkkinen, Chief Financial Officer. After market close today, we issued a press release with details regarding our fourth quarter results, as well as a supplemental of our results, both of which can be accessed through the investor relations section of our website at ir.c3.ai. This call is being webcast, and a replay will be available on our IR website following the conclusion of the call. During today's call, we will make statements related to our business that may be considered forward-looking under federal securities laws. These statements reflect our views only as of today and should not be considered representative of our views as of any subsequent date. We disclaim any obligation to update any forward-looking statements or outlook. These statements are subject to a variety of risks and uncertainties that could cause the actual results to differ materially from expectations. For a further discussion on the material risks and other important factors that could affect our actual results, please refer to our filings with the SEC. All figures will be discussed on a non-GAAP basis unless otherwise noted. Also, during the course of today's call, we will refer to certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in our press release. Finally, at times in our prepared remarks in response to your questions, we may discuss metrics that are incremental to our usual business presentation to give greater insight into the dynamics of our business or our quarterly results. Please be advised that we may or may not continue to provide this additional detail in the future. And with that, let me turn the call over to Tom.
Thank you, Amit. Good afternoon, everyone, and thank you for joining our call today. We finished the fourth quarter strong, and the coming year looks stronger. I believe that it's generally agreed that the overall market for enterprise AI now appears substantially larger and is growing at a much greater rate.
That is correct.
Than most analysts and experts
that is true.
predicted.
That is true.
We have been working since 2009 to develop product leadership and establish thought leadership in enterprise AI, assisting private and public sector enterprises to apply AI to improve operational processes. C3AI has been at the vanguard of enterprise AI, of the enterprise AI market for over a decade. As the market has developed from its roots in IoT to supervised learning, unsupervised learning, NLP, deep learning, reinforcement learning, and now generative AI. In the past 14 years, we have developed and enhanced the C3AI platform and now offer over 40 enterprise AI applications developed with that platform that allow our customers to rapidly take advantage of AI to improve their business processes. We have been communicating for over a decade that we believe that the market for enterprise AI solutions would be quite large. And now, as we enter the summer of 2023, it has become a dominant theme in technology discussions. AI has become a dominant theme in technology discussions, government discussions, media reports, defense and intelligence imperatives, and government and business imperatives. I do not believe that it's an overstatement to say that there is no technology leader, no business leader, and no government leader who is not thinking about AI daily. AI chip makers like NVIDIA are accelerating production to try to keep up with the very real demand.
Okay, so I can pause it there and keep going real quick. All the stuff you're saying right now to me makes no sense. Why are you talking about NVIDIA? Why are you talking about enterprise AI? We already know this. None of this applies to your company because the numbers don't speak to that. When Karp was talking about AIP demand, it's because they actually brought in a lot of clients, a lot of new customers. They beat revenue by $19 million, second quarter of GAAP profitability. That's why he was talking about the overall market. So I get why he's talking about the overall market, but I think we get that like enterprise AI is real, NVIDIA is real. I'm not sure why that means you guys are real. I mean, it's a nitpicky thing, but I think it's just, I don't know why we're even hearing about this right now.
That's out there. And all of this is being accelerated. The interest in applying AI to business processes is substantially greater than we have ever seen. In the fourth quarter, we increased our customer base, expanded our work with existing clients, and saw especially strong growth in our federal business. In the fourth quarter, our total revenue was $72.4 million. Our free cash flow was $16.3 million. And we ended the quarter with over $812 million in cash and cash equivalents. Importantly, we have a well-defined plan to be sustainably cash positive and non-GAAP profitable by the end of this fiscal year. For fiscal year 2024, for the fiscal year 2023, total revenue was
that was my point.
$266.8 million, an increase of 5.6% over fiscal year 22. Subscription revenue was $230.4 million, representing an 11.4% increase over the prior year. Let's talk a little bit about the AI applications market. Now, as the enterprise AI market has developed, it appears that the bulk of the demand is increasingly for turnkey enterprise AI applications rather than for development tools. This thesis is supported by an evaluation of our bookings for the past fiscal year that indicates that 83% of our bookings were driven by application sales. 17% of our bookings were driven by the sales of the C3AI platform. Importantly, we are seeing increasing diversity in the industries we serve. For fiscal year 23, an analysis of our bookings includes oil and gas was 34%, federal, defense, and aerospace was 29%, high tech was 13%, energy and utilities 11%, manufacturing 4%, food processing 2%, chemicals 2%, life sciences 1.5%, and other industries made up the remaining 3%. An important leading indicator of our increasing industry diversity is evidenced by the trial and pilot agreements closed in Q4. Federal, defense, and aerospace made up almost 37%. Manufacturing comprised approximately 16%, and high tech made up more than 10%. Oil and gas also made up more than 10%. When we look at ag, state and local, chemicals, energy, and financial services, each made up approximately.
Stock is down 22%.
As a result of the increased demand for enterprise AI, helped by our transition to consumption-based pricing, we are seeing a substantial increase in opportunities and shorter sales cycles. In Q4, we closed 43 agreements, including 19 pilots that were initiated in the quarter. The number of qualified enterprise opportunities targeted for closure within 12 months in our sales pipeline has increased by more than 100% the past year. During fiscal year 23, we closed 126 agreements, up from 83 in the prior year. The average sales cycle for new and expansion deals was 3.
Guys, real quick, I just got a Wall Street notification. This is, I don't know if the financial markets are reacting to this. Wall Street Journal, Fed officials signal they are increasingly likely to hold rates steady at their June meeting before preparing to raise them again later this summer. So June, we might get a pause, but we might get the hike in July. But if the pause goes well and CPI comes down in July, we might get a pause in July. I don't know. I don't know if this is like, it says breaking news. I don't know if the markets are reacting to it, but we'll get back to this. But it seems like we're getting a pause in June, even if we're getting a rate hike in July.
0.7 months, down from $5 million annual revenue. In fiscal year 23, we expanded our application footprint with a number of our customers, including Shell, Koch Industries, the United States Air Force Rapid Sustainment Office, PwC, Ball, ExxonMobil, Con Edison, the Defense Counterintelligence and Security Agency, Baker Hughes, the New York Power Authority, Duke Energy, ATB in Canada, Defense Innovation Unit, Roche, Cargill, and Engie. We also established many new relationships during the year, including the Department of Defense Common DoD AI Office, Daly City, California, Dow, ExxonMobil, Flex, Hexagon, Nucor, Owens, Illinois, Pantaleon, Riverside County, California, Stark County, Ohio, TELUS, Department of Defense SOCOM, Department of Defense Transcom, and ESAD. Many of these also expanded their AI engagements with us in the course of the year. Let's address the C3AI partner network. The C3AI partner ecosystem is increasingly effective at opening new doors. With our partners, we're able to provide prospects the assurance of success and the highest quality service. In fiscal year 23, we closed 71 agreements with and through our partner network, including Google Cloud, AWS, Microsoft, Baker Hughes, and Booz Allen. C3AI increased its qualified pipeline with AWS by over 24% in the fourth quarter, with particular focus on state and local government. With Google Cloud, our joint qualified 12-month opportunity pipeline grew from 25 opportunities.
Bro, this dude
is
so boring. Oh my gosh.
To 140 opportunities at the end of fiscal year 23, a 460% increase. And importantly, we closed 10 new oil and gas accounts in the year with our
but you ain't closed BP.
With
any of those oil and gas companies buy up 1% of your company, my guy?
And others.
Bro, this is so boring.
In Q4, we released the C3 Generative AI solution to the market.
There's another AI.
Our Generative AI solution
leverages
the capabilities of the C3AI platform and is distinguished from other GPT, LLM solutions in the market in several ways. Number one, it allows enterprises to access all their enterprise and open source data, ERP, CRM, SCADA, text, PDFs, Excel, PowerPoint, sensor data, you name it. Secondly, importantly, it provides traceable, deterministic, consistent answers. Thirdly, it enforces the corporate information access controls and security protocols that are currently in place. Fourthly, it has no risk of IP or data exfiltration caused by the large language model. And importantly, it is hallucination free. So if the system doesn't know an answer, it doesn't fabricate it, which is clearly unacceptable.
Bro, this hallucination word has to stop, bro. I don't know what hallucination just means. The fucking system is stupid, and he's saying it's hallucination free. So thank you for not making up that I am from Zimbabwe. Like, yeah, like we expect your AI to not do that, right? Like this is interesting. I mean, if hallucinations not happening is your key differentiator, that's well,
for any commercial or serious government application. After releasing the product in March, we rapidly closed 3 generative AI applications in the quarter with large enterprises, including Georgia Pacific, Flint Hills Resources, and the U.S. Department of Defense Missile Defense Agency. We expect these applications to be live during this current quarter. We are currently working up quite substantial pipeline of additional C3 generative AI opportunities with large corporations. The C3AI generative application is now available on both the AWS marketplace and the Google Cloud marketplace. It is difficult to estimate the size of the addressable market for these generative AI solutions.
What?
But it appears to be extraordinarily large.
It is difficult.
We saw a lot of momentum last year and in the fourth quarter with
Carp said $900 billion. I would
our U.S. federal business. The U.S. federal sector represented 29% of our bookings in fiscal year 23, and it continues to show significant strength. Our predictive maintenance solution, our predictive analytics and decision assistant, also known as Panda, has been in production use for several years at the United States Air Force Rapid Sustainment Office. And last quarter, it was selected as the system of record for all predictive maintenance for virtually all United States Air Force assets. Okay, this important designation expands our opportunity really substantially in the U.S. Air Force and other services.
Palantir is still holding 14, very strong.
Let's talk about guidance.
All right, guidance.
C3AI has a consistent and solid track record of meeting or exceeding guidance, as we have done in every quarter since we've been public. Okay, and we are, at this time, we are not inclined to pound on the table regarding guidance. In general, we feel comfortable with the expectations that the sell-side analysts have set for the coming year, and we are not inclined to change those expectations at this time.
So
for Q1, fiscal year 24, we see revenue in the range of 70 to 72.5 million. For the full year of fiscal year 2024, we expect revenue to be in the range between 295 million and 320 million dollars.
Yeah, he made the pound on the
As it
table
relates
reference.
to non-GAAP loss from operations, we expect to fall between
I don't know what this guy's saying right now, bro.
25 million, 30 million in Q1, and 50 million to 70
Sell-side
million
analyst means
for the year.
They're keeping expectations.
As we begin fiscal year 24, C3AI has never been better positioned.
Yes, Adam,
the
he said
addressable
that.
market is large and expanding. The overall business environment for enterprise AI is strong, and C3AI is front and center.
I want to hear some
in the
analyst
minds
questions,
of
bro.
CEOs and
Let's get to the
government
questions.
leaders. Our balance sheet is strong, and with over $812 million in cash and cash equivalents, we are in a great position to expand market share. As the dynamics of the enterprise AI market are developing so rapidly, we thought it appropriate to host a mid-quarter investor day in New York City on June 22nd. We will provide, at that time, C3AI investors a company update, additional information about our product roadmap, product demonstrations, direct access to the C3AI executive team, updates on our partner ecosystem, C3 generative AI demonstrations, and additional company developing news. Okay? We hope you can attend either in person or online, and that Investor Day event.
So why are they down 18%? Because he didn't say they're getting rid of guidance.
For all investors via
or did he just not say that, but that's what they published?
I will now turn this call over to my colleague, Juho Parkkinen, Chief Financial Officer, for additional details regarding.
If they guided down, that's
results.
why the market punished them, but I haven't heard him say it.
I will now provide a recap of our financial results,
Who the
add
fuck
some
is this
color
guy?
to the drivers of our financials, provide more detail on our first quarter and
All these
full-year
guys sound
fiscal
like they should be in
2024
office
guidance,
space. That movie.
and I will conclude with some additional color related to the consumption-based revenue model.
This
we
guy
introduced
definitely, his
recently.
wife cheats on it.
All figures will be discussed on a non-GAAP basis unless otherwise noted. Overall, the business activity is higher than we have ever seen. Our sales reps are more engaged, there are more opportunities they're working on, and there are more interest from our prospects. During Q4, our ability to close agreements was more consistent throughout the quarter compared to prior quarters this fiscal year.
Okay.
We ended the fourth quarter with
Jay,
a
is that
total
confirmed?
revenue of 72.4 million, of which subscription revenue was 78.5%. As we discussed last quarter, we expected professional services would be within our historical range of 10 to 20%, with our actual professional services coming in at 21.5% of the mix. Gross profit for the fourth quarter was 53.9 million, and our gross margin was 74.4%. We generated 27.1 million in positive operating cash flow and 16.3 million in free cash flow for the quarter. As mentioned during the prior updates, we have a short-term pressure on our gross margins due to a higher mix of pilots, which carry a higher cost of revenue than production deployment. Operating loss of 23.5 million.
Isn't Diablo the
due
devil?
to more
What are you guys
rigorous
talking about?
expense management. As a reminder, though, the fourth quarter is when we host our C3AI Transform customer event. As such, our marketing expenses ramped up to support the successful execution of that event. Operating loss margin was 32.5% in Q4, where the sequential increase was driven by our annual customer conference. For the full year fiscal 2023, our revenue was $266.8 million, an increase of 5.6% from fiscal 2022. Non-GAAP loss from operations was $68.1 million, and free cash flow was negative $187 million.
Are you guys hearing anything
Our
on
gross
this?
margin for the year was
That would be a threat to
77%.
Palantir.
Our subscription revenue
I'm not hearing anything,
86%
bro.
of total revenue compared to 82% in fiscal 22.
I'm glad I went with Palantir.
We ended fiscal 23 with
a lot of bag holders today on
$812.4 million
C3AI,
in
bro.
cash and investments.
It's a lot of bag holders today.
At the end of Q4, our accounts receivable, including unbilled receivables, was $134.6 million. Unbilled receivables at quarter end was $77.6 million, inclusive of $70.7 million related to Baker Hughes. During the quarter, we collected from Baker Hughes nearly $35 million. The general health of our accounts receivable is excellent. 76% of our receivables were current or less than 30 days past due. For the entirety of our FY23, our bad debt expense was approximately $300,000. Now turning to RPO and bookings. As consumption-based go-to-market model continues to pick up, RPO is a less important indicator of future performance. We reported GAAP RPO of $381.4 million, down 20% from last year, which is expected as a result of the transition to consumption-based pricing. Current GAAP RPO of $186.3 million is up 9.8% from last year end and up 5.7% on a sequential basis. We continue to see positive trends in pilot bookings diversity as we have sold pilots to a broad range of nine different industries during the quarter. Regarding our outlook for fiscal 24, we're guiding Q1 revenue to range between $70 to $72.5 million. For the full year 2024, we expect revenue to range between $295 and $320 million.
I think they were supposed to be like
$380.
$380.
The full year, we finished the third quarter of our transition under the consumption pricing model. As originally modeled, we expect flatness and somewhat of a decline in revenue during the transition, with an acceleration as consumption starts to have meaningful portion
flat and declining revenue. Those are the words.
We expect the second half of FY24 to have higher growth rates on a sequential basis.
Good game, my guy.
We expect our non-GAAP loss from operations to range between $25 and $30 million for Q1, and for full fiscal 24, we expect non-GAAP loss from operations between $50 and $75 million.
He said it with an upbeat. He's like, we're going to lose a fuck ton of money.
We expect to be non-GAAP profitable for Q4 24 and beyond.
But our ticker symbol is AI.
And as it relates to full fiscal 24, we are guiding to a range in operating loss due to the potential investments we may do for C3 Generative AI applications.
Yo, why did he have to say Generative AI,
cash
bro?
And investments to be at its lowest at around $700 million during fiscal 24.
My dude said generative.
Turning to customer metrics.
To generate some profits.
Historically, we have provided a quarterly customer count estimate as a proxy for the adoption of our products and solutions. However, due to the complexity of our contractual and pricing structures and the involvement of resellers, we believe comparing customer counts from quarter to quarter based on our current methodology.
Apologies for what?
Customer counts from quarter to quarter based on our current methodology does not fully convey the acceptance and adoption of our products and solutions. To help address this, we retained an external Big Four consulting firm to update our current customer count.
Oh my goodness! Oh, did he just say we hired McKinsey?
Consistent, systematic, and auditable. As a result of that review and adoption of those recommendations, we believe a metric that demonstrates contracted use cases that our customers are using our solutions to solve would provide a more meaningful understanding of the product adoption. This is defined as customer engagement.
You think the consulting firm is going to help your clients understand what product they're buying?
247 to 287, comparing Q3 23 to Q4 23.
Oh,
our traditional customer count metric went from 236 to 244 for the same.
So you added 8 customers, 244 minus 236. Quick math.
Which is available on our website. We are on track with our plan for profitability for Q4 24 and expect to have cash positive quarter starting Q4 24 on a consistent.
So profitability in a year and a half.
The entire executive team is managing the business to have detailed budgets on our plan for profitability. We are expecting to invest aggressively to generative AI initiatives during the first half of the year, which is reflected in the operating income guidance. As it relates to the model assumptions that we provided 3 quarters ago for our consumption-based pricing,
what is this?
our preliminary analysis of the actual results suggests we are on that model. Overall, we're very excited about the business momentum as we start FY20.
Where's the questions?
As a go-forward KPI for the investing community to assess our performance, we believe good KPIs to focus are the number of pilots started during the quarter, the conversion of those pilots to production, and finally, the actual vCPU consumption fees generated.
KPI is key performance indicator.
With that, I would like to open this up for questions. Operator?
Thank you. Ladies and gentlemen, if you'd like to ask a question, please press star 11 on your telephone. Again, to ask a
Fortune
question,
500 companies make
11.
PowerPoints.
One
And they
moment for our
present
first
them.
question.
I have friends that work there. It's not that special at all. I'm obviously exaggerating, but you get what I'm saying. Like if they have to, like.
Thank you. Our first question comes from the line of Kingsley Crane of Canaccord. Your line is open.
Oh, hi. Thanks for taking the question. So, Tom, you said that sales cycles were down to 3.7 months from 5 months last year. Why do you think that is? Is this entirely due to the consumption model? How much of this is due to general excitement around the potential in the space, and even potentially increased sales force productivity?
No, I think it's, thanks, Kingsley. I think it's all of that. I mean, clearly, AI is on everybody's mind. The consumption-based pricing model that we have makes it much easier to adopt our technology. I mean, in the old days, 1 and 2 years ago, to do business with us was, $5, 10, 20, $50 million to open the door. And now the transaction is pretty much, we bring the application live in 6 months for $500,000. If you like it, keep it, and pay 55 cents per CPU hour or CPU hour. So we're pretty easy to do business with. And so we're
That's
seeing
not special to you.
The
That's
number of transactions increase dramatically, as we'd expect. The ease of contracting with us, as you know, we have largely reconstituted the sales organization the last year and a half to a sales team that is candidly, much more productive and effective than our other sales organizations. So I think all of those are contributing
the other sales
to
people under the bus.
Increased pipeline, increased business, increased business activity, about which we're quite optimistic.
Stock is down 16%.
Thanks, Tom. That's really helpful. And then one for Juho. Thinking about the timing of the transition. So if it is the case that the vast majority of existing customers are not necessarily migrating to the consumption model, how should we think about the contribution of consumption over time, and then particularly in the back half? Because I think that you said, revenue could accelerate as consumption increases in mix.
That's a good question.
Yeah, Kingsley, thanks for that question. So that's exactly, as we sign and initiate more pilots within the quarter, the pilots are generally 2 quarters long, and then you start to see the consumption revenue kick in. As we finished the quarter with 19 pilots, last quarter we had a good increase in pilots with 17 pilots as well. You can start seeing those layer on to the revenue by Q3 and Q4 of this fiscal year. Now, to your point about renewals, we do expect our existing customers with the large enterprise agreements to continue to remain on.
Who are their large enterprise customers? I'm trying to.
But you will see the RPO trickle down as these
C3AI
contracts enter into renewal phase, and then we would expect to see a pick up as they renew.
Okay, very helpful. Thank you.
Who's our Baker
Thank
Hughes?
you.
That makes sense.
One moment, please.
They have Shell. Shell's an oil company.
Our next question comes from the line of Pat Walravens of JMP Securities. Your line is open.
Oh, great. Thank you. Tom, can you talk some more about the opportunity with national security and the Department of Defense?
Yes.
And then also you said something I thought was interesting about a version of generative AI that doesn't hallucinate. If you could maybe comment a little more on what hallucinating is.
They say hallucinate
and how
one more
you prevent
time
it from doing that. I think that would be really interesting. Thank you.
Well, like they're gonna have me hallucinating about my ex.
Well,
shit.
Pat, you've asked kind of many times about we have two basically authorities to operate contract vehicles, one's for 100 million and one's for $500 million in DoD, that are associated. It can be applicable to what we were doing at RSO. So that was the Rapid Sustainment Office and the Predictive Maintenance Application.
We have two government contracts.
United States Air Force for F-15, F-16, F-18, F-35, KC-135, etc. And what we made a proposal to the Secretary of the Air Force to take that into full production for all the aircraft in the Air Force, which is 5,000. I think the proposal would have increased aircraft availability for the Air Force by 25%, and I think decreased their cost of maintenance and readiness by about
that has
billion.
nothing on Skynet.
So he considered that, as did his chief of staff, General Brown.
It's interesting, though.
And they went off on their own for a few months while you were asking them the questions, and we didn't have the answers. And these guys go into their star chamber the way they do. What they came out with was a selection of C3 as the standard, as the system of record, not only for aircraft in the United States Air Force, but for all AI-based predictive maintenance, okay, in the United States Air Force, for all assets. So this is genuinely a big deal. Okay, now we have the opportunity to make this a line item in the budget. So this is, it's hard to, over-describe the impact of this or overestimate the impact of this. And then not only do we have it in the Air Force, we can talk now to other services like the Army, and the Navy, and the Marines.
Crowd did beat earnings and crashed. I don't know why.
This is a big one.
I don't know why.
The second one has to do with generative AI. So one of the problems with generative AI is you're limited to the number of data sources that you can use with these large language models. Typically, it's text, HTML, or sometimes code. And the large language model will interact directly with the data. But one of the problems is you get kind of random answers. Every time you ask the question, you get a different answer. If two people ask the same question, you get a different answer. And there's no traceability. It doesn't tell you where the answer came from. Okay. And finally, if it doesn't know the answer, it makes one up. This is what they call hallucination. So it doesn't know, so it just kind of wings it and makes up an answer. So we're using the entire C3 platform. And the way that we do that is we incorporate, as you, I think, all know, we're very good at aggregating enterprise data, extra price data, code, images, text, sensor data.
He's basically saying we train the models on proprietary data.
Image.
That's it. That's all he's saying.
When we do that, those data are read by a deep learning model, and they happen to be stored in a vector database. Then we have a kind of a firewall between that and the large language model. Now, our customer can use any large language model they want, be it Chat GPT, be it Palm, be it Bard, be it Palantir 5, whatever comes along next. Now, but we've built a firewall between the large language model and the data. So
basically saying we're going to keep it secure. That's really
every time you ask the question, it'll give you the same answer. Okay, if two people ask the same question and they have the authority, they will both get the same answer every time. Associated with the answer, it provides you traceability, so you can click on it. You can see
Karp says
exactly where the data came
more eloquent
from.
Way.
Okay, and
that's like a visionary
is
the way this guy's
there's no risk of LLM-caused data exfiltration. See Samsung for details, where they find out that all of their proprietary information is not published on the internet. Okay, and finally, there's no risk of LLM-caused hallucination. If it doesn't know the answer, it tells you I don't know the answer, rather than making one up. So, for these, you'd think would be kind of table stakes, and they are table stakes for any large commercial or government installation. And this is something that really distinguishes the C3 generative AI offering. And one of the reasons that we're seeing, very high level.
Is this going to massively grow customers? Are they going to be excited by non-hallucinations, or is there anything more to this? That's what I'm not getting from this.
Thank you. One moment, please.
This is
our next question comes from the line of Sanjit Singh.
Okay, we got an
Morgan
Indian.
Stanley. Again, our next question comes from the line of Sanjit Singh of Morgan Stanley. Your line is
what's
open.
up, bro? What you got?
Appreciate you guys squeezing me in for the question. Tom, earlier this week you guys announced had a press release about the C3 Generative AI Suite being available in the Amazon Marketplace, and it got me thinking about what the sales motion going forward is going to look like. As you sort of mentioned, generative AI is permeating the boardroom, the C-suite, in a pretty substantial way. And when we look at sort of, converting this interest into deals and ultimately revenue, how much of this is going to be like flywheel kind of self-service, consumption-based marketplace type deals versus you working with partners, taking a more consultative approach and helping these large enterprise customers sort of navigate the world of generative AI and actually deliver value?
Great question, Sanjit. So our first 3 engagements that we're involved in now will be at organizations the order of 100 billion or greater in revenue, okay, and have we'll bring the application live in 12 weeks. We're not doing it and we have like 3 people on the project, so it's pretty straightforward. Now the issue of going from say 6 customers to 60 customers to 100 customers is pretty straightforward. We know how to do that. Okay. The real key is, okay, in terms of blowing the doors off this thing, can we go from 6 customers to 60 customers to 6,000?
Okay, how are you going to do that?
6,000, now we have to leverage these channels like the AWS marketplace where the product's available today, the Google marketplace where they're available today. But in terms of usability,
that's not going to get you to 6,000.
It needs to be like the Apple iPhone. You open the box, you take the cellophane off, you turn
Being
it on.
on Google, AWS, or Azure does not mean
we're,
people are going to download your shit.
The next generation,
the same issue with Palantir.
The really
They're on
serious
all those
development
app
work that
stores
we're
too.
doing now on that product kind of relates to really product design, okay, and making it like an Apple product. You open it up, you turn it on, and it works. And so that's the challenge that's before us. I think we're up to it, okay. And if we're able to hit that note, hold on to your socks.
I appreciate the color, Tom. And then maybe one follow-up. Maybe this is for Joe.
I'm holding them, buddy.
Tom as well.
And
it sort of relates to the guidance for this whole year.
Just my leg.
I'm trying to,
That's what happens when you get older.
Contextualize like what's really driving the guidance for next year, because we're coming off a year, fiscal year 21. I think you guys grew north of 30%, 33, 34%. This past year, you guys grew sort of mid-single digits. The initial guidance calls for growth sort of mid-teens at the midpoint, sort of 20% at the high end. And I want to understand, like, is the acceleration you're seeing a function that you're coming off, a tougher year where you had spending environment was more difficult, sales reorg, those types of things, versus generative AI really coming online in fiscal year 24. And so is there any way you can sort of, attribute, those two things between sort of coming off of a tougher year versus, the demand that you're seeing in pilots and out in the field?
Well, Josh, let me address the premise, okay? Before we all wring our hands about tougher year. I think we got that in 4 times in the call for all the audience. Okay, let's remember, okay, when we announced the transition to consumption-based pricing, okay, we made it very clear that this was going to have a short and midterm, okay, negative effect on revenue growth. It's axiomatic. Anybody who knows how to use a spreadsheet can figure this out. If we're closing $500,000 deals instead of 10, 20, 30, 40, $50 million deals, the short-term impact on revenue is to dampen revenue growth. So I'm not certain that's so tough. Okay, that is basically we're actually getting exactly to the plan that we set. So this thing is exactly on track. Now,
so what do you guys have for lunch today?
Run through your little Excel spreadsheet model, and you hit the
I didn't have anything.
Okay, and you run it out a few years, a few quarters out there. You can do the math, and you know what happens. But I'm not, So I think we're exactly on plan with what we did. We made the investment. I think it was a great decision. It was a good investment. And now in fiscal year 24 and 25, we're going to yield the returns from that investment.
Cigarettes for lunch.
That.
Not bad. Salad, hot dog,
Thank you.
BLT.
One moment, please.
Fish and cabbage, not bad. See, that lunch sounds more exciting than this.
Our next question comes from the line of John Katsingris of Wedbush. Your line is open.
Hi, thanks for taking my question. This is John on for Dan Ives. So given the increased diversity seen, I guess, across industries served, how have you seen these use cases develop, and how do you see them playing out in the future? Thank you.
Great question, John. Well, right now, I mean, in terms of applying AI to enterprises, we're in, first half of the first inning and the first guys at bat. Okay, so this is an embryonic market. I mean, where we're seeing the biggest uptake.
That means it's small.
It was in the smart grid.
Embryo.
Okay, why the smart grid? Because they had invested $2 trillion, upgrading grid infrastructure globally to make all the devices in the smart grid remotely machine addressable. It's a huge IoT constellation. So that's where we saw it first. The next where we're seeing it in the past year, the largest market is in AI reliability, basically predictive maintenance. So in the military, they call readiness. Okay, or in the private sector, they call reliability. So AI-based predictive maintenance is the largest segment today. How will this evolve? I mean, it's clear we will be applying AI to all business processes: production optimization, demand forecasting, supply chain risk, okay, stochastic optimization, the supply chain, CRM,
supply chain, CRM, AI
aspect of business operations that will not be, and medicine.
He's just saying AI affects the world
and the science.
This is why AIP tomorrow is going to be more exciting to see how.
That will not be accelerated by the use of AI. So we're just going to have to, we're along for the ride and going to see where this goes in the next few years and stay on the balls of our feet as it develops, but it is a rocket ship.
Did he say stay on the balls of our feet? I don't know if that's
Tom.
the right wording for that.
Thank you. One moment,
balls
please.
on feet. He basically said AI is taking over the world.
Our next question comes from the line of Mike Cikos of Needham Company. Your line is open.
Hey guys, thanks for taking the questions here. Maybe the first would be going to Juho. So I know that you guys had cited the 43 deals you closed this quarter. 19 of those are pilots. Can you further refine that for us? And maybe it's just the classifications or names we're using for this, but like how many of those pilots are purely consumption-based versus maybe pilots that are still coming in under the old pricing model?
Hi, Mike. No, these all follow the new consumption-based approach. These are not under the old model at all.
Okay. Okay. And so I guess the follow-up that I have on that is with the 19 deals that are consumption-based, and I know that you guys have 19 pilots that you guys closed that are initiated that are consumption-based this quarter, and the other pilots that we've cited in previous quarters. Do we have a feel for how many of these pilots have now converted to production? And do we have a gauge for what the VCPU is for those consumption deals once they move into production?
That's a great question. So, Mike, on the first quarter we announced this would have been Q2, which obviously you take 6 months from that, we get towards the end of Q4. So we are very early in that in the conversions. We are standing by with the model assumptions, i.e. whatever we provided 3 quarters ago, where it is each pilot is expected at 70% likelihood to convert into a follow-on consumption deal. But I would say that the first quarter
Palantir held up well today. We'll talk about it on Palantir shareholders meeting at 8:45. We're going to go live, talk all about Palantir.
Those original pilot arrangements.
Understood on that. Thanks for that. And then just one quick follow-up, if I could, but wanted to ask just on the professional services revenue. I know it's huge, a tick higher versus that typical 10 to 20% range we've been talking about. And I just wanted to see, is 10 to 20% still the appropriate range we should be thinking through, or is there maybe more hand-holding for these pilots that as you guys engage in them, or is it maybe hand-holding of potentially federal sector customers? Like, how do we think about the higher pro-serve revenue generation in Q4 versus what you guys are thinking about over the next year?
I think on a go-forward basis, we expect to be in the 10 to 20% range. There's always going to be these types of projects that our customers want, and it's difficult to forecast a specific percent in a go-forward revenue, but we believe 10 to 20% is appropriate on a go-forward basis.
Thank you for that. I'll turn it back to my colleagues. Appreciate the time.
I don't know what they just said,
Thank
bro.
you. Again, ladies and gentlemen, if you'd like to ask a question, please press star 11 on your telephone.
Yo,
Again, to
call
ask a
in.
question, please press star 11. Our next question comes from the line of Brad Sills of Bank of America. Your line is open.
Adam got some puts, baby.
Hey, great. Thank you. This is Adam Brashear on for Brad Sills. So you're pretty well positioned in the current market, just given, AI use cases are coming into focus. So kind of curious if this has changed your cadence for R&D investments at all.
Well, this is Tom. I mean, clearly the investments we've made in the last 14 years are paying off. Okay, in that we have over 40 applications and people want applications, and I think we're the only company in the world that has 40 applications.
Oh my gosh.
I think the only recent change that we've made is we're a little bit shocked by the response that we had to C3 Generative AI. I mean, we're a little bit overwhelmed by that. That's a big opportunity. And so now we just came off a planning meeting and we decided to, really invest in that product category in a big way, because it's just difficult to estimate the size of that market, but it's extraordinarily large.
Yep, fair enough. And then for, kind of the generative AI use cases and solutions thus far, just, I guess the first, just your first take on it, but do you see any, outsized uptake, or expect any outsized uptake within certain verticals over others in your view? Thank you.
It's a good question. It kind of seems like everybody is interested in this. They want, at the level of the CEO or the person who operates manufacturing and the person who operates sales, they want basically a Google-like interface where they get a web browser-like interface where they can ask any question about their business. Okay, where are the problems in our supply chain? If I'm the chair of the Joint Chiefs, what are my readiness levels? They have 35 squadrons in Central Europe. I mean, well, that's what we call Google for DoD, but their OpenAI initiatives can provide,
I hope this is the last question, bro.
Defense or the chair of the Joint Chiefs of Staff answers to that question in seconds.
These execs might as well be hosting this call in a dunk tank.
For most people to get those answers.
Adele, thanks for being here, bro.
I don't know any industry that will not be taking use of this technology. It's really quite amazing.
All right. I appreciate the perspective, Tom. Thank you.
Is that it?
Thank you.
That's it?
One moment, please.
Why are they doing so many questions, bro?
Our next question comes from the line of Mike Cikos of Needham & Company. Your line is open.
Hey, guys. Thanks for getting me back in. I did just have one quick follow-up. Maybe building on the question that Sanjit had asked earlier, but taking a different look, rather than looking at the revenue, let's talk profitability for a second.
Okay,
but
profitability.
Obviously, you guys are issuing guidance now, which is below street and below what you guys had initially flagged if we go back a quarter ago.
That's why the stock tanked.
Maybe for Juho, can you help us think about the additional levers you have to pull on to ensure that C3 is achieving its target of exiting fiscal 24 with non-GAAP profitability?
He's saying, how do you get there?
Before we answer it, Mike, I do want to poke at the premise a little bit. Okay, I think our guidance is pretty much in line with what the street expectations are once you take.
No, my guy, your stock's down 20%.
So I think
Street
our
didn't
current
expect
guidance
that.
is in line with what the street currently has. I'm pretty confident of that. Now, the other question related to, how are you sure you're going to get to profitability?
Right. So, Mike, one of the things that I had on the prepared remarks was our planned investments into generative AI, which combines that and vendor expenses. I think we can control spending towards the end of the year if, for whatever reason,
so cut some costs. What are the costs you're cutting?
Would not occur from those, but we're pretty bullish about the generative AI opportunity.
Such a bad answer. Oh my God. He said we're going to be profitable because generative AI exists.
But that being said, we don't
at
need
least
the generative
Carp
AI
said U.S. commercial. That's how we're going to be profitable.
Zero. Okay, and we're still going to run a cash positive profitable business in Q4.
That doesn't make sense either, Star.
Well, we have a very, very detailed plan that's been.
It doesn't sound like they
distributed
believe what
to all
they're
the
saying.
members of the management team. They all have big budgets. They know what's going to operate. You can expect it to be a cash positive profitable business.
Bro's going to say AI is going to carry them to profitability. That's literally what they said. Yeah, that's literally what they said. They're
Thank
like,
you.
AI
One moment,
exists.
please.
It's generative.
One more question.
Thank you.
Okay, last
Our
question.
next question comes from the line of Noah Harmon of JMP Securities. Your line is open.
Last one.
It was great to see, the average sales cycles for agreements tick down, I think, by about 1.3 months year over year. What's really driving that, and where do you think a sustainable sales cycle basically concludes that? Maybe thinking about the rest of this year. Thanks.
Well, I think the consumption-based pricing model is driving it, where it's pretty easy to adopt when you can have a large-scale enterprise AI application live in production in 6 months for $500,000. I mean,
all right, that's it. He's just answering the same consumption-based model. So, conclusion to this: a Palantir daily shareholder meeting will be at 8:45 tonight, and then 10 p.m. we have Finance Junkies. So 8:45 till 10 p.m. I'll be talking live, and we'll discuss all the Palantir news. We've got a lot of stuff. We got the Jacobs partnership. We got Palantir holding strong at 14. We got C3 earnings. We got Wejo that did not go bankrupt. Wejo did not go bankrupt. Okay. I got this wrong. A bunch of people got this wrong yesterday. Wejo is just delisted from the stock exchange. They need like $100 million to get back on the stock exchange because their stock has been under $1 for like however many months. So they're still in business. They're just not a public company anymore. It's not as bad as bankruptcy. It's not good. But in terms of the exposure to Palantir, it's neither here nor there because the exposure wasn't that strong, to be honest. But Wejo's not fully done as a company. They're not like dead. So they still have a shot to survive. So we'll talk about that. Okay, so conclusions on this call. So let's spend about 10 minutes here, and I'll answer some questions, then we're done. My conclusion of this call was exactly what I thought it would be. And I didn't come in here with a braggadocious kind of arrogant attitude, even though it sounded like I was throughout the call. That was just a little bit of entertainment. I was actually looking for what this company does, because I wanted to see if there was a thesis. I wanted to see if, the stock is up 300% in a month. We could say it's a meme rally, but I wanted to see, hey, is there something here that is fundamentally differentiated? For those that don't know the origins of C3, as this is the research I've been doing, they started off as a carbon company, then a energy company, then an IoT company, and then they transitioned to energy. Or AI. They were literally called C3 IoT, C3 Energy, C3 Carbon. The 3 stands for like reduce, mitigate, something like that when they were dealing with the carbon stuff, energy. And now they hopped onto AI. I think they hopped onto AI like about 7-9 years ago. So it's been some years, but the fact is they kept jumping from thing to thing to thing to get to eventually AI. So I came in with some expectations of trying to hear what is the core differentiator. And as I'm listening to this earnings call, I think 3 things. Number one, there is not a differentiated moat around what the product does for enterprises that is different from something like Palantir or obviously any of the other AI enterprise tools that exist. The most I got out of this was your LLMs will not hallucinate. And if that's the moat, that LLMs don't hallucinate and don't give you fake stuff, which I think eventually in the next 6, 7, 8 months, every AI company should be able to stop hallucinations, then that doesn't seem like a relatively strong moat to me there. So that's the first thing that I didn't think there was a core differentiation. Second thing is I don't understand if demand is sky high for AI and the market is growing and you're going to name drop NVIDIA 17,000 times in 5 minutes, by the way. Why is your guidance down? Why is your guidance down like 50 million? Like, why is that happening? Why is guidance either flat in terms of growth quarter over quarter, or it's down for fiscal year 2024 or whatever they're calling it? Like that doesn't make any sense to me. And Karp said the opposite. Karp said demand is high, and he thinks that they're going to close a lot of deals. I mean, he basically said that explicitly. And so the question becomes, if C3AI is guiding down, Snowflake also guided down, is there a macro concern? I didn't hear anything macro from the CEO. I heard something macro from Frank Slootman. I didn't hear anything macro from Thomas. Or is it a product problem? And even though demand is high, if your product can't, supply product market fit to that demand, then you don't have a product that's going to work. So that's one thing I didn't hear. Sean says you're wrong on these points. Sean, if you're free, I'll give you a link and you can come on, help educate us some of this. This is what I'm understanding from the earnings call. I don't hear, and this is again what I get from the earnings call. I don't know the entire company. I know some people may know the company more than me. What I heard from the earnings call is not a differentiated moat in terms of their ability to help enterprises outside of we won't let them hallucinate. Again, if you're going to differentiate from Palantir, I don't know what's the difference there, or from any. I'm sure every company doesn't want your LLMs to hallucinate. And then number two is why your guidance is down if the demand is high. I don't have a conclusion to that one. Amit, why are you flipping us off? I'm sorry about that. But like that's kind of the two things I got from this. Why is guidance down if demand is high? And again, they spent the first 10 minutes talking about NVIDIA creating all this demand for enterprises, but the full year guidance is down 50 to 75 million. That doesn't make sense to me. Profitability is a year and a half away. That also is like, well, that's a long time to ask for profitability if demand is sky high. And then number two, I don't understand what is their differentiated approach to help enterprises outside of not allowing hallucinations. Now, maybe there is. Maybe there actually is a fundamental different way they go to market and they help companies other than some of the other guys, but I'm not hearing it. And if I'm not hearing it, I at least on this earnings call, I'm not understanding it. He didn't even mention any differentiators about his product offerings other than the amount of them. That is also correct. He said we have 40 applications. So what? What does that do? Like, for example, when Palantir talks about Foundry, Gotham, and Apollo, they explain that we may not understand all the differentiations, but there is a difference between them. Right? Apollo is the backend system to do simultaneous and autonomous deployment. Gotham is big on the government security stuff. Foundry is obviously their flagship software. And then AIP built on top of Foundry is their ability to keep data secure and transparent, but also increase business intelligence. I did not hear, and correct me if you guys hear this or you understand this in the chat, why C3 is different going to enterprises. Like, for example, if C3 goes to Tyson Foods, here's the simplest way to answer this question. C3 goes to Tyson Foods, Palantir goes to Tyson Foods. Now, obviously, we know we have a case study. Palantir saved them $200 million. Could C3AI save them $200 million? That would be my question. Send me the link. I have a few. Okay, good. So Sean is actually a shareholder in C3AI. So we're going to get his thoughts. Sean, I'm sending it to you on Twitter right now. And we can get your thoughts and you can hopefully answer some of my questions about what we have going on. But again, what I'm getting from earnings call, just sent it. What I'm getting from the earnings call, what I'm hearing on the earnings call is not an answer to that question. And that question was asked by the analyst. But that is not what I heard. And so that is one of the things. Sean, the link is sent. We're going to get you on and listen. Sean, for those that don't know, does have a position in this. He's very public about his position in this. He is not giving you a buy or sell recommendation, but he does have a position, so he does know the company a lot more deeper than us. And that's another reason, to be fully transparent. That's another reason I was really interested in this, because Sean is invested in them. So I was like, okay, I kind of want to know what Sean sees at a little bit of a different level. The earnings call was trash. I would agree. Obviously the market thought so, but also the way they just presented it, it was just not sounding the correct way. Sean, what's up?
Hey, what's up?
All right. So can you educate us a little bit here about what were your raw thoughts to earnings? And if you heard any bit of the call, anything you think that was good that the market is overlooking, giving them down 18%?
Sure. So let's take a step back first and foremost. We absolutely have got to stop comparing two totally and utterly different companies. You're saying like Palantir is a dump truck, so this bicycle sucks because it doesn't haul dirt. It's a completely different product that does different things. It's based on different usage. It's sold in different ways.
By the way, the only reason I'm doing that is because the market's putting them in that category. And
sure, but is the market doing it because everyone keeps talking about it, no one's correcting it? Or is it because they actually related and they both just happen to talk about AI?
That is fair. Now, granted, C3 also put up Palantir as on the conference they just did and called them a data lake. Right. So I don't think it's unwarranted when they bring up and they say, oh, Palantir is just a data lake, but we're more special than them. Right. I don't know if you saw that video. It came out 2 days ago.
So here's the thing. I want to be
That's
clear.
The only reason I'm comparing them, even if I'm wrong about the comparison. But that's the reason. It seems like they're bringing Palantir into the comparison when they talk about them on stage at their conference. And that's why I'm like, well, why exactly are you different here if you're going to pull them up as a competitor?
Yeah. So just to be clear, like we have to treat these like they're totally different technologies. Okay. One is an app. One is a platform for storage and analytics of data. Okay. The AI piece doesn't matter. What kind of analytics they do doesn't matter. They all can work with data warehouses, data lakes, and data lake houses. Okay, so just keep that in mind, that like where the data resides, how it resides, cool, no big deal. So there's no point comparing them. And I want to be clear too, just for the record, I don't actually give one rat's ass about
we know.
the company.
We know.
I just saw a wildly undervalued position in the $10 and $11 range, and that's when I went all in on this.
Yep.
But I want to give you a little bit more because I think it's important to understand for people who are looking at this. The reason in what he got, if you noticed, he got upset on the call that people kept asking him a question over and over again.
Correct.
I want you to think more AWS, Azure, Google Cloud versus Palantir here. What C3AI is doing is they're switching to a consumption model, and the reason revenue is going to be down. This is speculation. I don't work there. I have nothing to do with that.
Please explain, because I'm curious about this. So I would love
I want you to understand when you buy Palantir, which is a reason why I happen to love the company, what they do, you are buying an entire disruptive approach to the way you go to market as a company, as a government, as a military, okay? But that's expensive. It takes years. We're talking millions of dollars, 3 to 5 years to be actually in production and working. Very important that people understand this. What C3's go to market is we sell pre-packaged apps. And you buy the apps, you put it into the workflow, connect it to the data, and it starts working right away with minimal outside support. You can deliver insights to action within the flow of work. This is a big deal. The reason the pricing model has to change, though, is because for them to grow to the next level, they had to do this. And I'm going to explain a little bit about this. When I was at IBM, I was on the team that moved us from prem to cloud. That was my job there. We did this with all of our analytics offerings. We moved from Cognizant, SPSS, and Watson onto on-prem machines. We moved them into cloud environments. It took a long time. It was a big process. All good. So anyways, long story short, the reason this is important is they work by going in and saying, like AWS, like, hey, Amit, you're starting a company. You don't need a $500,000 platform, and you definitely don't need $1 million to install it. Let's get Audia on AWS for $200 a month. Is that enough for today? And you say, $200 is enough. I'll get some users. I'll start growing. When I need more, I have elasticity. I'll add more consumption.
Correct.
If they came to you and said, well, you have to buy in 50K increments. Sorry, you don't like it, too bad. You're going to have to go and find someone else. What C3 is doing is they're saying, in a switch to consumption, the expectation is likely that the initial contracts coming out of a pilot will be smaller, right? But over time, as they get they're winding through the company, right? Think like HR, then they get into finance, then they get into operations, and they get into sales, and they get into service, then they get into customer success, and they get into product development, and they get into product marketing. That's the model, is as they have more and more use cases, more and more types of data, and different people using it in different ways, that consumption, the users, the data storage, that's what will grow to be bigger and bigger over time. That's where you reach the exponential growth of a cloud offering versus the capped, predictable growth of a platform offering. Both are great, but it depends what you're selling, right? They're selling rent to a growing family. Palantir is selling a house to someone who's already really big.
Are you saying they wouldn't target a client like Tyson?
That story is a joke, by the way. We got to stop bringing Tyson. Like, people don't know the details there. I can give you 1,000 clients that I've personally worked with and installed AI. That is not a big story. That's saving a couple $100 million. That's peanuts, guys.
So my point is, would they go after a client Palantir goes after?
Of course. So
okay, so why can't we compare them? That's my question here. Because if they're going after the same money, right, and their guidance is down, like this is what I'm trying to rationalize.
There's a reason. There's a reason. Take any business in the world, front end and back end, right? Palantir is very focused on operational analytics on the back end. C3 is very focused on application-based usage of its apps in workflow, okay? It's a nuance that matters when you work in this industry, because sometimes I need to have all of my data in one single place to do massive amounts of hard data science. Other times, I just need to know which email should I send, or what format, or which customer, who's likely to churn. Easy things, an NRR prediction, a CAC prediction, right? Simple things. One is about giving answers. One is about building a transformative platform. I don't think C3 is super exciting, but I think what I like about it is they have $800 million in cash and equivalents on a $4.5 million market cap.
But see, that's correct. Now, so another question is, could a client that uses C3 or Palantir use C3 or Palantir? Could they use both for the front end back?
So let's put a stake in the ground for a second. Not only can they use both, they're probably using 12 or 15 others. A typical architecture meeting for me in my living, right? A typical architecture meeting is understanding, okay, you own 17 or 18 business intelligence and analytics tools. That includes AI. You typically will have 4 or 5 data warehouses. You'll have 50 to 70 independent departmental-based applications. So you have to understand marketing teams probably using 2 or 3 analytics solutions. Sales is using 4 or 5. Services using 4 or 5, right? So it is completely reasonable to have both for totally different reasons that do totally different things, right? Keep in mind, there's also BI tools. There's pure analytics plays. There's packaged offerings and apps that are singular and focused on only solving for one problem. So it's very important to understand that like this isn't a sum zero or sum all. This is like, let's get as much as we can, grow as big as possible, move on to the next customer with that use case.
Okay. Go ahead.
I'm sorry.
No, it's interesting because then you bring up the business stuff, and so I guess here's the question. And again, not financial advice. Do you think a $4 billion market cap is undervalued for something? This is what I'm confused about. The guys like generative AI is exploding, and then guidance is down. I know they're switching to the consumption model, but theoretically, you would imagine if consumption is going through the roof because they can be integrated, even if the company is using AWS or CRM or Palantir, then they should be able to grow a lot faster and take advantage of that. And then 400 million or 4 billion is undervalued.
When I
guess my question is, if they're not profitable, why is 4 billion undervalued? And if they're not growing as fast, why is 4 billion undervalued?
Why was Palantir underpriced when they were at 20 billion market cap to you?
When they were at so that was what, like $11, $12?
Sure,
one would argue the growth. Now, I am on the train that they shouldn't have been 20 billion because growth went from 41% to 18%, and I hope they're sandbagging. But if Palantir doesn't put the growth back from 18 to like 23, 24, they are probably overvalued right now at $30 billion, right? They can't be growing 18% year over year.
I don't know. Here's the thing, though. This is the point that I'm trying to get folks to understand. And you know what? You know me outside of just being on a camera together. So like, I'll explain a thesis that I think is really important for everyone in the comments. And by the way, I want to answer these questions. They're coming so fast I can't keep up with it.
People are excited to see you again. They haven't seen you in a while.
Yeah, the beard's been coming in real good too. Here's the thing that I think it's important for folks who are maybe haven't seen me for a while or haven't seen me on for a while. This is a thematic investing style that I take, where I look at a sector, I look at the players who have the potential to see very big growth, both in earnings, in customers, and in stock price, because I'm not in this to make friends, I'm in this to make money. So it's the same reason why I happen to like Palantir, the company, but I really like C3, the stock. Now, I don't typically work that way, but as a thematic sector-based investor, I want to find 5, 6, 7, 8 companies that fit into my profile of risk with upward potential. Because of that, I got a 3 to 4x return on C3AI already. I'm up 2 on Palantir. The reason I'm
Are you out of that position, Sean, or you're still holding them?
Actually, the news was better than I thought, so I decided to hold. I actually canceled my trail, which I never normally do. But I think probably Chris knows this. A couple other guys know I did open up puts to protect myself on the way down. Correct. So those will pay tomorrow. For me, this is a risk worth taking, but only because, again, I have a sizable enough portfolio to protect myself. I have hedges in place. I still think that we haven't actually scratched the surface of what generative AI will be. I want to be clear too, and I think you'll agree. It's mostly vaporware right now. It's just talk. Everyone's talking about what it's going to be, how it's going to work, what it's going to do, similar to the way AI was. There's one particular question that stands out to me that I think Luke might have asked this at some point. I wrote it down on a piece of paper next to me because I thought it was a really good question. So Luke, apologies if I remember this wrong, but you asked the question, would integrating 2 different AI systems, there you go. So this is a really good question for people who are relatively newer to this or don't work in the business. You have to think about AI sometimes as company-wide and sometimes as problem-wide, right? Like, I don't know why pilots aren't closing. I want to unleash AI on that problem. Other times it's, how are we going to fuel a changing macroeconomic environment based on the current data that we have in comparisons to the way rates are getting changed at the federal level, right? Those are bigger questions, but it's still just a question. The key is I always have to be careful what I say, but I'm going to give you an example here. Let's say you are working with either personally identifiable information, PII data, or you're working with HIPAA data. You might have to have an effective wall between those data sources. And if you have an application that's just for HR, maybe you're safe because no one else can access that data set within that model, right? Same for HIPAA, same for GDPR compliance, Same for whatever, right? Doug, you're totally wrong, dude. This question.
I was just about to ask. I think, so this is a common
totally
stuff
wrong.
people
I don't know
say.
where he's getting this from.
I don't think that's the case because companies, especially Fortune 500, they use a lot of applications, right? It's not just
you don't know you're using them. I mean, like you pick up your phone, there's 1,000 things running in here to make sure that you have socket packet delivery, you have real-time activity, you have refreshing in the background. You don't know you're running those programs. When you're on the front end, you're just seeing your UI with everything integrated from the IT and CTO departments.
Because
right?
you work in the sales spot in the space, does Palantir go to clients, in your opinion, and say, hey, you don't need those 20 apps, just adopt us, and that's why it's a harder sales call? Or do you think they're like, all right, you're going to keep C3, CRM, also use us?
I have a buddy who's a sales director there. The challenge there, okay, C3 has the same problem, actually. It's unrelated to the technology or to the companies. So if I said to you, what is the number one concern CIOs have today in 2023? What would come to mind?
CIOs being chief investment officers.
Chief
innovation.
Yep.
Information. Knowing what to prioritize when making decisions in a variety of variables that they have to make decisions for.
Nope. I know that makes sense. The number one problem they're running into is how to cut costs right now and still operate at full efficiency. So the reason why I saw this as a financial play was because in the near term, with all the layoffs and people getting let go, all these things, they're having to go and understand who can they cut, what projects can be put on hold, what will keep their business running. So integrated applications that prove out points are cheaper, easier, and easier to consume. Here we go on consumption models.
Versus the entire thing that Palantir.
Exactly. So this doesn't mean that they're right. It doesn't mean that they win. It doesn't even mean that they have good products. It just means that there is a reasonable expectation that if it did work, here's what it could go to versus here's what happens if it doesn't.
Okay, so to summarize this, because this makes a lot of sense to me, you're saying there's two companies. Palantir goes to there's one company. Palantir says, hey, adopt this whole fucking thing. We're going to solve a bunch of your problems. The company, the CIO there is like, we don't really need to do that. We don't want to spend that much money. C3AI is like, hey, you can solve like 5 things versus 20 things. Adopt us. Now, which makes sense to me. My question is that market opportunity, that TAM for C3 solving these modularized issues versus the like overarching issue that Palantir could solve for an entire organization? You think from a stock perspective or like an undervaluation perspective that market hasn't even opened and C3 is a front runner in that market?
Oh, great. Dude, great question. Great question. This brings me back to when we were doing the IBM talk, like feels like 25 years ago.
I still think it's views every day.
Yeah. So here's what I want you to think about in terms of opportunity for this space. Okay. This space, depending on who is looking at it in different ways, it could be pure AI, pure LLM, analytics, BI, whatever. Okay. There's the total addressable market, and then there's the serviceable addressable market, right? I know you know this, but for anyone who doesn't, the total addressable market is what if I was to sell to every possible consumer on the planet of my products? The serviceable or SAM addressable market is what can we realistically probably sell to and actually win those deals? I'm looking at the market caps and the reasonability within those market caps. Palantir, in my opinion, has a much bigger SAM, hence why they're, what are they, like 4 or 5 times bigger by market cap? Something like that.
Yeah. Yep.
Whereas obviously, and C3 is much smaller. So I think that like the current state is they're both going to get a hell of a lot bigger, which is why I'm so excited. Like this, for everyone sort of like, this is bull crap. That's bull crap. I hate these guys. I hate those guys.
The tribalism. In this.
Correct. And what I'm saying is like,
and I played into it. I'm not going to lie.
Well, but that's okay. Right. Okay.
You got to ignore the comments. The comments are going to be the comments.
It's just, they're so fast. I can't read them. Right. I want to make sure everyone, gets respect. I think you have to understand, like, there's a really interesting thing going on that is like, I mean, if you've been around a long time, this isn't super normal. These are growth companies, or they're trying to be growth companies, right? I think, obviously Palantir has more potential once they start getting these big things rolled out. That said, though, one is sitting on $800 million. The other sitting on 2.9, I think was the last number I saw.
Yeah.
Just think about how wild this is that the minute they can solve for the LLM, generative AI, integrated solutions, they have the kind of capital to explode on the scene.
What do you mean that? What do you mean by that? That they have the capital?
One thing that was said on the earnings call that was really good, and most people don't talk about, is he was saying like their costs for the quarter were actually much higher than normal because they had a like what's the word I'm looking for? Like a big conference and a customer conference or whatever. Other than that, they're wildly tight and aligned on keeping expenses really low. This is every company in the world knows there's two things you do. You cut the cost of internal expenses and then you fire people, right? This is very normal. They're doing things that good big companies should be doing. They're just still trying to find their observed and efficient pathway. When we think about these kinds of products, there's two words that I want everyone to think about: efficiency and efficacy. This is really important when you're looking at these kinds of companies. Efficiency is the ability to go out and talk to tons of clients about your solutions and how you're going to help their business. Efficacy is actually getting them closed, right? And I think we're at a point where we have not optimized whatsoever the sales teams of these kinds of companies. Again, I've been doing this for over 20 years. I haven't built my own company. Like, I just want everyone to understand, like, as long as you are reasonably protecting yourself and doing the right things, there is a lot of upside potential because they can easily scale into other solutions. And even in the case of C3, 800 million is obviously a ton of money. When you compare it to like Apple or Berkshire, it feels like it's not a lot, but that's a lot of money.
For the market cap too. It's a lot.
It's a ton of money. Same with Palantir. They're positioned to potentially do something huge. Now, here's the thing. Here's what I don't know. I don't know if there's something wrong in the accounting. I don't know if the wrong person's leading it. I don't know if they're going to go out of business in 6 months. So I can't base my thesis on those things. I can only base my thesis on what I know and is publicly available. They're sitting on a ton of cash. They are growing. They have explanations for a lack of growth. I'll be honest with you. I was thinking about this too. Like, when they ever lowered guidance, that was like I've been doing this for so long. It's not like I don't stress out or it doesn't bother me in the least. I'll sleep like a baby tonight. But I was thinking to myself, man, what if instead of that, they said, we're going to keep guidance the same?
Yeah.
Does it go down or does it go up? I don't know. Maybe it still goes down because everybody's going down, right? But I do think it's an important call out.
No, go. I was going to say,
go for it.
What's the bear case on C3 from a tech perspective?
Plenty. I mean, one thing I think I've probably said with you a few times is, as Palantir keeps delivering these like best in class large scale platforms, once they find a way to productize that and put it in a SKU wrapper, a SKU wrapper. But like what I want people to understand, if you don't work in this business, again, is a SKU is very much like going to the grocery store and you've got like, here's the bread, here's the tomatoes, here's the lettuce, here's the bacon, here's the burger, right? Like, they have very much like Gotham, Foundry, Apollo, AIP. But like, how do you buy them? How do you sell them in a self-service way to add users easily? How do you get growth easily? Those are kind of the things they haven't developed yet. And my opinion is they shouldn't have yet. And that's sort of the exciting point there. I'll close that though.
And so your kind of argument there is, because Palantir has not modularized the products and C3 is consumption-based pricing, literally based on selling to that serviceable addressable market and solving those small things, there is an opportunity there where they can keep getting market share for these smaller modularized products until Palantir figures that part out, which again, it's very hard to figure it out.
And for the record too, it does, perhaps Microsoft figures it out. I saw Doug, like, if anyone hasn't checked it out, like Fabric is really a fully integrated solution, but everyone is coming out with these kinds of products. AWS offers their own on-platform solutions. So the point that I want to make is, there's a reason these kinds of companies exist when there are big players. My other thesis, and this is pure speculation, absolutely do not go on my word here. At the market cap they're at, sitting on the cash they're at, you could reasonably buy C3 if you're a relatively good sized company, pick up all of their customers and the technology, and have a pretty good name to go with it.
You think the CEO is going for that? What are your thoughts on Thomas? Because I know there's a lot of controversy around him as a leader.
I mean,
he's been a very successful businessman, right?
Yeah, I used Siebel CRM for years, man. That's how I learned CRM back in the day.
About him.
He is a brilliant marketing focused CEO, and I think it's important to ensure that there's a really tight CFO. Not because I think he's doing anything wrong, but like, you know how it gets when you get very excited about your own product. You know, Kane, I think this is a great question. I want to also call out though, just team, I want to be totally honest with you here. Like, again, like I'm not like into this company. I just saw a
Sean's in it for the cash.
Yeah,
right
man.
now.
This is me buying my yacht money on C3 right here.
And trust me, I've heard some of the gains, and it is close to.
We're getting there.
So how do you feel about them getting majority of the revenue from Baker Hughes?
Huge concern. But if you actually listen, though, and I think this is an important call out, it's also somewhat misunderstood. Baker Hughes is technically sort of reselling for them, not in the most, not like an actual reseller. But what I mean by that is, if you listen to the earnings call, what they said was, via our relationship with Baker Hughes, we sold to ExxonMobil, to whatever, right? So
Right.
it's a weird symbiotic relationship. But yet, Kane, if I was like, look, I'm putting the next 20 years into this, I would be very concerned. And that's also why I'm hedged, because one piece of bad news comes out about Baker Hughes, I mean, it would not be good. It would not be good.
Here's a question. Do you have any exposure in Palantir?
I'm basically naked to Palantir. I'm so exposed. They're going to call the police on me soon for that. Yeah, I've been. I think people just. Can
you give us an update on your thesis? I know we have like probably maybe 5 minutes left with you. What is your thesis on Palantir? What do you think about the recent run up 100% in a month, and why are you naked in terms of your exposure to Palantir? He just gave me the Elon pause.
Yeah, well, it's like I think this is a fair question, because I realize, like, you and I have done a lot of pods together, but not on this topic for a while.
I mean, we did a whole pod. I'll link it. I just put his Twitter in the chat as well. But I mean, for a consolidated kind of 5-minute explanation, if you will, why is Palantir a big part of your portfolio? And I mean, do you trust it at $14 up 100% in a month? Like, how are you thinking about how it is right now?
Based on what I believe that they're, again, team, I'm only saying this for caution. Like, I'm very cautious about anything in this sector, because there has to be a lot of proof behind it. But let me start here. I'm not like new to AI, or like I didn't decide to like create a Twitter and talk about AI like 95% of people. This has been my job and my life. Watson at IBM was working on that. Like, before that, I was doing it myself and building everything. So let me talk about my thesis here real quick. They're building you have to think about it in two real big ways. On one hand, they're creating an operational interoperability across systems of all kinds of magnitudes, data storage, APIs, right? They're bringing together a lot of very, very complex, non-standardized, non-normalized data. What that means is they're pointing it at a junkyard, and they know exactly what's in there and can tell you where it is and how to get to it. On the other hand, they're trying to deliver it in an operationally efficient way, so that you can work with all that complex data and then derive heavy results from it. Now, in the top of your head, you might say, a lot of people can do that. Amit and I, with 10 grand, can have that built by this weekend. We can stand up an AI solution that's not horse crap. Anyone listening to this can do that. The difference is, and this is where my thesis began when they were a private company. For those who don't know, I've been in the space for a long time. I started following Palantir very early in the days of Palantir. I was
2011-ish,
yeah, so I'm not like 2 weeks ago I didn't get interested here. So yeah, I am definitely in. And I went super heavy in the low single digits, thank God, because that has really paid dividends. The key piece here, and I know we've said this before, but it's so worth calling out. C3 is working with Baker Hughes so they can prove out why they're so great for oil and gas, and then become exponential off of that. That's pretty interesting, and it's an interesting use case. These guys were delivering battlefront wartime solutions, literally, to save lives, win wars, receive information in real time, and act on it. That is a use case that, if successful in the commercial markets, delivers a 1-2 punch that's going to be hard to compete with. And the thesis is, if they do that, it's going to be a huge win. And if they don't, maybe it fizzles and stays where it is.
Right. And that's why you're in.
So that's where I'm at. I got to go and sit down and eat dinner here with the fam. This is
all right. Thanks for joining, Sean. We appreciate it, especially you educating us on C3 and Palantir. And I'll just put your Twitter in the description. You guys can follow him there. He talks a lot more about this stuff on Twitter. Thank you, Sean. Appreciate it.
See you later, bud.
Amen. All right, that's it for this earnings call. I think this was good. Sean is an investor in the company. He loaded up in the low, in the teens. He's up a lot of money on the company. He understands them a lot better. I think what I got from him was Palantir selling the whole cake, C3 selling a slice of the cake. And so the comparability of them, even though C3 is bringing on the comparisons with Palantir, right? And because they have called Palantir out publicly on stage, they kind of warrant it, but it seems like they're going after a different market. And maybe both could be big. The question becomes if Palantir takes up that market when they modularize, or if Palantir just eliminates the need for that market, which maybe they won't ever do, maybe any company won't ever do, then that is going to be the cat and mouse game over the next 10 years as we're going to see generative AI play out. So this was awesome. Thank you, everybody. I'm sorry, I didn't mean to ignore the comments. We just had a lot of comments, and I wanted to get Sean's thoughts out there. I think he answered most of the main questions we had about C3 in comparison to Palantir. This is a great conversation. Kudos, guys. George, thank you for that. Yeah. Okay. That's pretty much it. I will be live for Daily Palantir shareholders meeting because we're doing that every day. 8:45. We've got a lot to talk about. And then Finance Junkies at 10 p.m. Kelly, yes, we'll be live. We've got a lot to talk about what's going on in the markets. There will be junkies on tonight. You coming with your handsome face? Yes, I will be there. I don't know if you guys, if you think it's handsome, but hopefully the radio voice, the radio face is entertaining enough. AIPCon tomorrow. It will be live streamed on this channel for 6 hours. We're going to be analyzing every single company that talks about how they're using AIP. And I'm very curious about this. I want to know how revolutionary is this product and how is it really helping clients. So it's going to be really interesting Kelly wasn't even talking to me. She was talking to someone else. All right. That's it. Thank you, guys. I will see you in about an hour and a half. Bye-bye.